Good morning, everybody. Mike Vacchi, Princetontrader here from Mr. Topstep with your Wednesday morning pre-market webcast. Okay, just a quick look at the 15-minute chart. Here's what I'm looking at. We made these highs up here, 71 quarter, on the Globex Sunday night. Lower, lower, little higher relative to this one and this lower one, but still lower relative to this high. And what the bears, though, haven't been able to do since yesterday is to make a lower low below 56.5. So we'll have to see what the open brings. You've got 1460 here. That is basically been a double bottom here, at least so far. But we're going to make a run at that right now. CPI was up a little bit versus unchanged. The market didn't do anything crazy with it. What I want everybody to look at, though, before I switch to the daily chart is this. You've got the daily pivot and the 3-day pivot. Within a handle of each other, that is a zone. It seems to be acting, at least for Europe and into the early morning, as a resistance zone. Tried it again. That's 3 times, couldn't do it. So my lean is that we're going to have a little bit of down pressure, at least off the open. But as we go to the daily chart, let me zoom in a little bit, you can see bears have knocked it down, bears have rallied it, or bulls have rallied. Knock it down, rally at green, okay? And the bears look like they're ready to try again. Until the bears can push through one of these lows and chase the weak hands, the dip buyers that are weak, out of the pool, this pattern will not change. Okay, I'm concerned now as far as the Bollinger Bands go on both ends. You've got space above, but now, I mean, for an extended period of time now, ever since the gap up on the fiscal cliff, you've got all this space between price and the middle band. And I challenge you to find a period of time where that's sustainable. You can see it here back in August. This big gap between price and the middle band, it wasn't sustainable. And you still had, a gap up here, but eventually price migrated down slightly. I mean, the band did a lot of catching up, but one way or the other, we're going to see the middle band. Mean reversion is going to happen. And the rally yesterday was one of the most excruciatingly heavy lifting looking rallies I've seen in a long time. The buyers are tired. They are holding this together with tape and baling wire. You're just not seeing. You're seeing the bounces off the dips, but you're not seeing the rips. And then more buying come in and new highs. You're not seeing that. At least not for the last few days. So the bulls either have to find it in them to break through 71.5, or the bears are going to continue to knock things down in the morning, and eventually they're going to push it through. And if they push it through, then we're going to go see 50. And if we see 50 and break 50, we're going to go see 46. And if we go see 46, we are way too close to the middle band at 43 not to go say hello. Okay? And that's how pullbacks happen. All right, so that's what I'm looking at today. Should be a very interesting day in the markets. No other. We got the housing market index. We got industrial production at 9:15 Eastern time. We got the housing market index at 10 o'clock Eastern time. That's not a big deal. The beige book at 2 o'clock is kind of a big deal, at least in my eyes, because this market is acting a lot more macro than it is micro. I think the market cares a lot more about what's going on in the 10 federal in the Federal Reserve districts versus whether or not Intel what Intel's margins look like or what or how the dollar is affecting Caterpillar. I don't think the market cares about that as much as it cares about where's GDP going to be for the fourth quarter. Okay, so the beige book today should be very interesting. Okay, have a fantastic day. Mike Vacchi, Princetontrader for Mr. Topstep. Trade them well, everybody. I'll be back tomorrow morning with another webcast.